Hello, everyone. Thank you for joining us on this webinar. I'm Glenn Stebbings, President and CEO of Logistic Insurance Solutions. And joining me is our Head of Marketing, Ryan Miller. And we're going to discuss today an overview of logistics and the brokership program we've developed and how this is a resource for retail insurance agents in the domestic logistics area, particularly retail agents that focus on trucking. This program is designed for what we call the non-asset side of trucking. That would be the freight brokerage operations. And many, if not most, motor carrier operations often have freight broker operations in place. And we're going to explore the issues that are present within freight broker authority, the coverage options, the consulting services that are so important. And I just thank you for participating. So a little bit about logistics, okay? We have been in this space for 48 years. Started my career in 1974. I've been involved with logistics the entire time. Over the years, I've launched this agency in 1998, and I have a team of professionals all dedicated to domestic logistics industry. Some of the top talent, quite frankly. Former risk manager of Pacer International, Michael Stahl, is head up our risk insurance department. And the experience that we have at the end of the day is a big factor in developing markets, knowledge of the industry, and our abilities to support retail agents in that space. We're the first agency to develop a fully comprehensive insurance program and risk management program specifically geared for the domestic freight brokerage industry. My staff, by and large, has 20 plus years of experience. So throughout our operation, there's a lot of resources and knowledge about this space. So we want to discuss why there's a strong need for the Broker Shield program in the current freight market. There's a number of factors that are driving that need. The reality is freight brokerage operations are contracting motor carriers to move freight. They don't touch freight. They contract freight brokers. Think of them like a travel agent who you would approach to have yourself shipped somewhere around the world. Now, a freight broker is a party that organizes transportation for shippers who want their goods moved, principally throughout the United States and Canada right now. The average motor carrier right now holds $1 million of coverage. There's about 450,000 motor carriers in the marketplace, and about 90% of them only have $1 million. Certainly, there are larger motor carrier operations with higher limits, but frankly, because there's a need for capacity, freight brokers are going to, in most cases, be dealing with truckers who only have $1 million limit in place. If we're to look at litigation trends for the motor carrier industry, it is, quite frankly, a very difficult class. If you drive up and down the 95 in Florida, you can count plaintiffs' legal signs, on about every other mile. There is such a focus on going after major trucking operations. The litigation environment is just horrendous for that class of business. Freight brokers get drawn into that as well because they're contracting motor carriers. The average judgment right now is $3 million on average per fatality when the freight brokers the motor carriers deemed the negligent party in any one accident. Judgments can be much higher than that, however. In fact, because there's no tort reform laws limiting judgments against motor carriers, there's essentially unlimited liability. We've actually had $1 billion judgment over the last 12 months involving just one individual in Florida. So it gives you some idea, of the extent of liability motor carriers can assume. The litigation trends for freight brokers in the United States have some concerning situations arising. Freight brokerage authority traditionally has enjoyed limited liability for cargo claims and limited liability for bodily injury claims. And one of the principal defenses that were used in much of the litigation over the last decade is specifically federal preemption. And very simply, what federal preemption states, and it would be a motion that's filed, is when litigation arises in a state appellate court. Those are environments that ideally you do not want to have litigation taking place in. And the reason for that is in some states, judges are actually elected, states like Texas, Louisiana, Florida, and their biggest supporters is the plaintiff's bar. So those wouldn't be viewed as friendly litigation environments. So historically, motions for federal preemption have been successful in dismissing the state appellate court case. It would then have to be moved to federal, a much more friendly environment. However, over the last 72 months, some state appellate judges have deemed that federal preemption does not apply to bodily injury claims. That's an extremely concerning trend right now, because now litigation's having to take place in these environments that often are plaintiff friendly. Lower limits in general are taking place through many motor carriers, mid-sized and smaller ones, because going back to the claims that are taking place against motor carriers, the rates are extremely high and it's a tight market. So you're seeing motor carriers with less limits in place. Much higher premiums are in place for motor carriers, but also freight brokers, directly related to the last 72 months of poor rulings that have deemed that federal preemption is not an issue to knock the litigation out of a state appellate court. So, why freight brokerage? Why get involved in that if you're principally focused on the motor carrier side? There was a law passed several years ago called MAP 21, and it required all motor carriers, if they do not move freight on their own equipment and are trying to dispatch it to another third-party motor carrier, that they have freight broker authority in place. Bottom line, there's 28,000 companies that have freight broker authority in place. And so it is indeed a sizable market, and many motor carriers have freight brokerage operations. It gives them a broader spectrum of shippers that they can service, because they can move a certain amount of shipments in their own lanes on their own equipment, but they're being approached in other lanes where they don't have equipment, and having freight broker authority gives them the ability to move that freight as well. With that in mind, your abilities to provide the right coverage for freight brokerage operation, and maybe equally important, the right risk management consulting services that we provide to you, that's increasingly a big factor at the end of the day. It can, frankly, help you win the motor carrier side. If you've got great markets in the motor carrier side, you want to have equally great markets in the freight broker side. And I can confidently say we have the best markets, the best coverage form in the marketplace. And we'll talk about how we substantiate that a little later in this presentation. So one of the big issues that we support retail agents with is understanding what are the financial exposures in a freight brokerage operation. How is that different than a motor carrier operation? Freight broker authority is one logistic authority that could be in place. In the United States, you have three authorities, though, that actually could be present. Could be motor carrier authority, could be freight broker authority, could be domestic freight forwarding authority. You will have some operations that are even more complex that get involved in international logistics. And then at the end of the day, there's a number of other authorities that could be present there. You could have NVOCC authority, you could have international freight forwarding authority, indirect air carrier authority. They could be a custom house broker. They could be a warehouse operator. We've been in this space, again, for 48 years. We know all of the risk inherent because that's been our exclusive focus at the end of the day. So we can help the retail agents understand what's present in any given insured and make the right recommendations on the right coverages that need to be in place. The services that any one entity offer can differ, as we're reflecting here in our slide. They could be organizing the transit with motor carriers exclusively, that's freight broker authority, but same operation could have a separate entity that operates as a motor carrier. In some cases, they might have that in the same authority as the freight brokerage operation. That poses some potential exposures that we work with retail agents on and consulting around that. Cross-dock services, this gets into some more domestic freight forwarding. There could be warehouse operations that they have, and they're taking in trailers and they're consolidating or deconsolidating, particularly on shipments that are coming in from overseas, intermodal shipments. So all of these are factors that drive risk. We understand all of them, and we can work with you when we see them present in any given business model. Our applications give us a good sense of what's present, and then we can do the best job of making the right recommendations for the right coverage, along with giving some good advice in the risk management side.
So I'll just jump in for a second and introduce this slide here. So I think the thing that you guys are going to notice as Glenn is going through this is that Logistic isn't just providing insurance markets. We're also coming in and supporting the marketing and sales effort required to consult and convert your freight broker customers. Most of our agents are primarily focused on motor carriers since it's the larger market, but we know that the freight broker business model is unique. And freight brokers are extremely sensitive to that. They understand, they want to be working with agencies that understand their business model. We've seen time and time again where they're actively looking for to work with other agencies that better understand them, because they know that the policies that are being put in front of them need to best reflect where their exposures are and where they're looking to go. We also know that certain insurance lines that we're offering they empower a freight broker to go win and maintain customers that they couldn't before. So because Logistic is wholly 100% wholesale, we're not selling direct. We have built a channel network of agents that we are training, motivating, and empowering to be those officers that can speak to these freight brokers authoritatively. We bring in sales resources, marketing resources, training resources, because you guys need to be seen as the experts that are consulting your freight broker customers. So what we want to do is make you guys the experts so that you're able to build loyalty and trust with your customers. And instead of just selling a solution, we focus on these 4 categories. And Glenn's going to get into some of the details of them, but essentially, we know that when it comes to a buyer journey, when we think about that from the sales and marketing side, you have to initially build trust with your customer. Then we have to help the sales team throughout the sales process. And a lot of that has to do with shifting the perspective from this is a commodity to this is a high value add purchase that will actually enable me to doing things that I want to do. And of course, there's a pretty exhaustive competitive landscape. So really helping our agencies to differentiate from their competitors. And then as Glenn has mentioned before here, because we understand the freight broker model so well and have done it for so long, we know the unique needs and are able to put forth a program that best fits that broker's needs. The $2 million broker has a different need than the $100 million broker has a different need than the $500 million GFR broker. And then lastly, we know that churn is a huge issue in every insurance industry. So it's what are we doing to help your team to retain those customers and get those renewals? And there's a process behind that. So Glenn, if you want to get into the specifics of these.
Yeah, thanks, Ryan.
Yeah.
I'll touch and add a couple of comments in the categories we see here on the screen. And as Ryan mentioned, a customer is going to be most comfortable with somebody who's talking to them about and understands their business model, what their challenges are at the end of the day. It's a critical factor. That's where you first establish trust. We want to be thought of as a resource in your training. And many of the retail agents also ask us to actively engage directly with their insureds with them in conference calls where we can explore questions that arise. And we're viewed as a program manager. We think of ourselves as much more than a specialty wholesale provider of insurance coverages for the domestic logistics industry. I like to use the phrase program managers because we're involved in all aspects of it. The initial analysis of the exposure, the identification of the coverages that they need, a review of their current coverages and where there may be gaps. So we can identify you're now covering these gaps through what we're putting in place. At the end of the day, understanding the breadth of coverage that's present in any policy is really important, particularly in the freight broker space. There is a limited number of insurance carriers writing this class of business. But we were one of the first, starting in 2014, in developing a full comprehensive suite of coverages that freight brokers need. We actually manuscript our policy forms based on our knowledge and experience of that class. So we feel strongly we have the broadest coverage in the marketplace, and we caution agents to carefully review and understand the coverages that are present in other markets. We try to support you guys in that area. We do honest, fair evaluations of policy formats that are out there. If we identify, just based on what's reflected in those policies, any clauses that should be of concern, and then we compare those to the coverage formats that we provide. So a comprehensive understanding of the coverage differences takes place through that process. And these can be huge. We're going to get into the details of our coverage form and how it's broader, but they can be a real difference at the end of the day.
Well, it's because insurance is confusing, right? And at the end of the day, if the insured doesn't understand the things that are happening in the legal portion of the contract, they're only going to be comparing price and what that coverage limit shows, right? But they're not going to understand all of the different contingencies that might be in place that other insurance markets are sneaking in, because the goal is to not provide coverage. So we help our agents to shine a light on the things that are the real core differentiators, and we do it in a simplistic way so that the insured can see it apples to apples, because it's not always a comparison on price. It's well, do you want to pay for coverage that's actually going to support you in these scenarios? And by creating these tools, now we have a visual. We're not just saying, oh, we have broader coverages. We're actually showing them, here's what the coverage you have today is, or the coverage you're considering, and here's why our coverage is superior. Is that valuable to you?
Yeah, exactly. I mean, we have friends, obviously, in the freight broker industry. We're members of the TIA. We're hanging out with the industry heads. Just last week, I was in Washington, D.C., with the TIA, lobbying for legislation that supports transportation industry. And, so I'm dealing with the heads of the largest freight brokerage operations in the world, and they're picking my brains constantly. I had one presidency who said, frankly, I have no idea what I have in place. I don't really understand it. My agent hasn't done a good job of explaining it, so I'm at a loss, and in those scenarios, the tools that we provide in our, PAR documents, policy analysis reviews, really is helpful and helps the retail agent get across the points.
Well, Glenn, it's interesting you mentioned it, because we obviously have strong relationships with freight brokers, even though we're not selling to them directly. And in the scenario you just described, the freight broker is saying, my agent is not really able to educate me on the things that I need to know. And then we've also in our conversations with agency sales managers and directors and VP of revenue, one of their main asks to us is, how do you help us to train and equip our sales team? Because what happens is, in these larger agencies, you might find that maybe one or two producers kind of pops up that's equipped, but it's not scalable for the agency, and they're not really taking it on and focusing on freight brokers. They just say, oh, send everything to John because he understands that. But we help to build, we have a training program that we can take them through at scale, so that 40, 50 producers at a time can become equipped and really understand, what does this market look like? What are the challenges that those key stakeholders at freight brokers care about? How do I move up and down the value chain? How do I identify what each person that I need to sell to cares about? And then really better understanding the lines and coverages and things that are happening in the market that's really driving this need. So that's a huge part of what we're doing, is just knowing that you guys have to be, your sales teams that are speaking to the customer has to understand that. And if it's not something that, and we don't ever expect that they're going to know the business model as well as our team. So we then pair them with our own producers that can help team sell. And that's been very successful for us, especially in winning the larger freight brokers, where the competitive scenario is very high.
Yeah, in those scenarios, the clients, appreciative they've got a retail agent whose job is to get the best market, the best coverage in place. They're achieving that through our operation, but then the value added of us providing consulting services that we can directly present in conjunction with the retail agent to the retailer, creates another touch during the year. If you're just talking to your client once a year at their renewal, there's not much engagement, and there's not much of a relationship necessarily being built. But with our support, we can put on, we're providing valuable content that we provide to our retail agents. They can put their brand on it, provide that to their clients. It again demonstrates knowledge and valuable information. But then, joint webinars, and there's real touches taking place through that process. That, at the end of the day, truly supports retention.
Absolutely. All right.
So what are some of the larger corporate executives saying about our operation, or the industry in general? They are faced, because of the litigation trends that I mentioned. There's a high awareness. Shippers are being drawn into litigation as well as freight brokers. There's no downside for a plaintiff to name every party. So there's a high awareness. And what we are seeing is increasingly shippers coming up with contracts that they're looking for freight brokers to sign in order to move freight. And those contracts, are constantly identifying their requirements for the freight broker to financially protect them and indemnify them from exposures that are present. Now, if a freight brokerage operation has a complementary coverage like freight broker auto, that's a significant issue at the end of the day, because typically what we're seeing is freight brokers with higher limits, and that policy can be extended to protect the shipper. So that's a huge issue. There's an awareness, there's a solution that's provided there, and coverage that responds. It's a common issue for the $100 million CEO, but even the small guys, 2 million guys, if they're going to be trying to participate in that marketplace, they need some basic coverages. And they are relatively affordable for startup operations. It's all based on the gross freight receipts and the volume of freight that's moving. So there are base premiums that are not high, and they are able to be put in place by a freight broker starting up. That gives him now an opportunity in the marketplace to compete and gain some business and grow their business at the end of the day.
So just to add the cherry on top to what Glenn is saying here, when we look at this from a marketing standpoint, which is the same perspective as sales should be looking at it too, It's not about what we're selling. It's about why would somebody buy this, right? And people only buy anything, whether it's a hamburger or an insurance policy, because it's solving a problem for them or it's helping them to achieve an outcome they're looking to accomplish. And this is an insurance market that has a value proposition with every size of freight broker out there. But as we can see, those value propositions are different. The largest brokers out there are working with the largest shippers, and the shippers appreciate that there's a policy that protects them, right? It's the cost of doing business.
Yeah, Ryan, you make a good point. You make a good point. And I want to say, yeah, the large guys, they're real interested, or in many cases, they're looking for more information, but many of the big guys have their own risk managers that have been hired, don't necessarily need that support. I will say the middle market freight brokerage operations, anywhere from 20 to 50 million, 100 million, don't necessarily have a risk manager on staff. And so bringing that education and training to a freight brokerage operation of that size is viewed as a huge value added. Of course, with the small guys as well, they're bringing us to the table to engage their shippers, and they do that. We also are asked by our retail agents and our freight brokers to engage their shipper clients to explain some of the value adds of the coverage portfolio that they've invested in and how they benefit the shipper at the end of the day. So we're trying to touch all aspects of the industry to support our retail agents at the end of the day. And those are some of the ways we approach it.
Yeah, very well said. I mean, some of our agents are supporting the largest freight brokers in the world, and they are not getting lazy and just anticipating that they're going to have those freight brokers forever. It's very competitive for them, and they have to continually provide value and be on their, on the offensive in maintaining these large customers, because it's not about that initial sell. It's about maintaining that customer lifetime. Every single year they're renewing. So if you're looking at your book and you're working with some of, one of the household names of freight brokers, then so are your competitors, right? And it's not just about saying, hey, are you happy with everything? Okay, I'll check in with you in 3 months when it's time for renewal. It's really about, hey, how do I better help you to resonate with your customers? How do I continue to show you value? So it's really what it's about.
We are.
All right. Keep going here.
Well, so about LogistIQ and the Broker Shield program. Number one, we've got the most extensive network of markets that write this class. We don't have just one market. We have several markets in place, and that's important at the end of the day. We have primary programs, and we have excess capacity that can sit on top of those programs. At the end of the day, that's a huge factor. And I say this because there are a limited number of markets that are writing this. Now, starting in 2014, being the first in the industry, we've been able to build up a significant volume of premium production for those markets. That's built loyalty, and that's built a desire for other markets to engage us and offer their capacity to our operation at the end of the day. The consulting services, which is a huge factor in the program, it's not something that you're seeing typically from other wholesale operations. They don't go to the depth that we do in developing content, directly supporting the retail agents and educating them, and then where requested, supporting their freight broker clients directly and engaging them in risk management support at the end of the day. And again, I mentioned earlier, we developed our policy format, and I've yet to see another policy form in the U.S. market that can match what we are doing. And there is a wide variety of coverages that are present. So you must be careful and cautious about what's really present in these policies. But there again, we help you through our analysis, which is just pulling real information out of those policy forms, identifying why this might be a concern, and comparing it to our form at the end of the day. Huge issue for our retail agents, and it's greatly supporting them, particularly with the larger accounts, is our capacity. By far, we have the most in the US market. $30 million undercover holder agreements exclusive to our operation. What does that mean? That means within 24 hours, we can typically quote an account that might have limits as high as 50 million in place. We've done as much as 65 million on one placement. Then being able to bind within 72 hours. It's a huge factor. Most of the markets out there don't have more than $5 million of capacity. Many just 1 million of capacity. So that's a huge value added and puts you in, the game to go after the larger operations that are demanding those kind of limits now. Again, going back to the litigation trends and the concerns around that. But it is a massive marketing vehicle for those freight brokerage operations who are carrying limits of 20 to 30 million, because on their bigger clients, they can extend that coverage. And that is a huge issue at the end of the day. A shipper gets named in litigation, it's 6 figures just being named to get yourself out of it at the end of the day. So having that kind of financial protection in place is a huge value added issue for a freight brokerage operation. We've generated more than 120 million in premiums since 2014 with excellent underwriting results for our markets. Why are our results been positive? Well, getting started in 2014, we've built up a ton of premium prior to the bad litigation trend that has taken place. So our markets have a history of being in the space, have benefited from being in the space, and are now prepared to deal with the onslaught of litigation that's happening at this time. But also our risk management consulting services, we can look at a business model. A typical error that we see is you'll have a motor carrier operation that has opened a freight brokerage operation, but they may not have stuck it into a separate entity. That's a huge exposure for them at the end of the day. And many of them will do it just from a marketing standpoint. They have the view that shippers want to deal directly with trucking operations, and it's called the bait and switch. And they might engage a shipper as a motor carrier, but then move it for their freight brokerage operation. That is problematic. That's going to cause and open that freight brokerage operation to the nuclear claim, because and those scenarios where they've been egregious in holding themselves out as a motor carrier, but they're actually moving freight as a freight broker, they are subject to the unlimited liability of a motor carrier. And as such, punitive damages and awards, we've seen awards in excess of 20 million leveled against freight brokerage operations. So what needs to be done there, and we counsel all of them, is your freight brokerage operation needs to be in a separate entity. It has to be, because its definition clearly states they never move freight on their own equipment. They don't ever take care, custody, or control. Now, if you're in the same entity as your motor carrier operation, plaintiffs will use that against the freight broker. They're in a much more difficult position to defend themselves, because in theory, they're in violation of the definition by being in the same entity. So that's just one issue that we help identify, and we've had many operations listed as counsel and put their operations to separate entities at the end of the day.
And guys, we actually have a webinar that is going to be coming up on the website soon that was recently recorded. And depending on when you're listening to this, it might already be on there. That is specific to providing pointers to freight brokers about how to reduce their liability with these kinds of strategies. So if you want to see more about that or show that to your freight broker, then that will be available as a video on our website under webinars.
Okay. So here are the specifics of some of the markets that we have in operation. And I'll mention, we're constantly working on expanding our capacity. We have, the Travelers Lloyd's Syndicate, well-respected market in the U.S. It's well-known. Many of our retail insurance agents actually do business with Travelers in the U.S. On the motor carrier side. It's a well-known and respected name. They offer primary limits in our program and the whole suite of coverages that freight brokers typically need. The specialty logistic exposures, freight brokers, E&O, professional indemnity, in our cover holder agreements with them, we have a 1 million limit available there. Typically, they're not buying limits higher than that. Freight broker cargo legal liability, it's a defense policy. It's designed to respond should a motor carrier fail to pay a claim and they're named in litigation against the cargo claim. And that does arise, obviously, when there's higher value shipments. We have freight broker auto third-party liability. I'm going to classify that as the most important coverage a freight broker can hold because there's the greatest financial risk that's present for freight brokerage operations. They're being drawn into litigation, and we're defending more than 30 right now, have settled claims in the millions, just extricating them from that litigation, which could be substantially higher if they didn't have that coverage in place. At the end of the day, it is, as I mentioned earlier, a huge value added for their key customers to have those kind of policy limits that are available, accessible. We have in the same package a general liability policy. A general liability policy written on a premises basis. And it's written on a premises basis because our freight broker / third-party liability policy actual covers what I would call the territorial GL exposures. And that would be outside of your operation. So one of the issues within our coverage form is it covers not only accidents that arise during transit, but prior to that, when it covers the freight broker authority. So when they dispatch a trucker and he goes to a shipper's warehouse, what happens? The driver gets out of the car and he's walking around the warehouse, and lo and behold, they slip and fall sometimes. And we've had litigations that we've defended with the drivers just suing the freight broker. That's not common in many of the freight broker auto formats in the marketplace, but our covers both. Freight broker contingent cargo broad form. Now, this is the product that I'm going to call customer friendly. The cargo legal product is not customer friendly. It's there to defend you if the motor carrier failed to pay a cargo claim. But for those key customers, there are many freight brokers. We can offer it on a customer exclusive basis or for all your clients. But typically what we see is freight brokers just putting it in place for their larger customers. That's designed to respond when motor carriers fail to respond to a shipment that's a full truckload shipment. Full truckload shipments, motor carrier is going to be responsible up to the value of the load, both under CARMAC and both, and under the freight broker carrier agreements that are in play. But many motor carrier forms are not broad and have many exclusions or excluded commodities or warranties. The format that we have is a very broad all-risk cargo format. It doesn't have typically the exclusions that are present in motor carrier policies, a broad range of cargo products that are insured, but we work closely to make sure we understand what that freight broker is moving. And if there's an excluded commodity, we can negotiate coverage for that as we're aware of those. But it's a broad form that's really, I would call, customer friendly and designed to respond to those scenarios. Our Markel syndicate, backed up by various highly touted syndicates, including QBE, is our secondary primary program that we have in place that we can access, offering us all the suite of coverages. Essentially, it's complemented with Hiscox. It does the general liability, and then it's complemented with a broad form contingent cargo product. So what you see there is the complete suite of coverages that are available in several markets. Okay, now here's our slide on our access program. We have capacity, as you'll see, 29 million, excess of 1 million, up to 30 million. Those are under cover hold agreements. We can add a capacity on top of that. And as I said, we've gone as high as 50 to 65 million on any one placement. These policy, this freight broker access policy can sit on top of the freight broker auto third-party liability policy, can sit on top of a general liability policy, and it can even sit on top of an employee liability policy that will be present under some workman's comp coverages. So it's extremely broad umbrella responding to those exposures where increased capacity is many times required. Our freight broker E&O excess policy can provide limits up to an additional 5 million. So as much as 6 million can be in place for professional liability E&O. Moving on. All right, here I'm going to mention two other programs just so you have awareness of them. We have Freight Insurance Fast Technology Shippers Interest Program. And many of our retail agents, in fact, sign up for this program. And what it is a technology platform that we offer and is used in the marketplace, specifically around some exposures that are present on domestic cargo shipments. For example, full truckload shipments, the average motor carrier's got 100,000 limits in place. But what do you do if a shipment is valued at 200 or 300,000? In our technology program, they can instantly get the excess capacity they need, 200, 300, as much as 1 million over the primary policy that's in place. So it's very useful for freight brokers to have access to that coverage, and retail agents offer a link for this technology platform. And that link has their agency code embedded in that. So we provide a marketing material that offers that, and they can distribute it to their motor carrier clients and also their freight broker clients. So freight brokers now can move freight through a wider array of motor carriers because they'll get the required cargo limits in play. For LTL freight, this is where primary cargo coverage is really required because many LTL carriers have filed tariffs where their limit liability for cargo claim is as little as 50 cents a pound. You got $1,000 shipment, or 1,000-pound shipment, I should say, could be valued at $40,000. This platform allows them to get primary coverage, select a low deductible, and effectively now they're fully insured for the value of that shipment that's being moved LTL. So it's got big capacity in the domestic space. And by providing our retail agents with the advertising information and explainer about the program, they then can provide it to each of their clients. And as I mentioned, a code is embedded. And when that client of theirs uses the program, they're accessing it through this link. We know that it's coming from our retail agent and they're paid a commission. And so effectively, this is, no touch revenue. Once you've sent it out to your client, you may even actively market that to these clients. Once they're using it, they're getting paid every month. So there's no processing, no work really being done by them because we're collecting the premium associated with that trip transit. We're paying their commissions, once a month at the end of the day. So no touch revenue. It's a lot of interest for a lot of our retail agents.
Hey, Glenn, you mentioned you did mention that it was available for both freight brokers and motor carriers, but you really only spoke about the value prop to a freight broker having a wider range of carriers. Yeah. Talk about it from the motor carrier side. Yeah, so from the motor carrier side, they have a motor truck cargo policy in place, let's say for 100,000. Well, that motor truck cargo underwriter doesn't have the technology or the abilities. I mean, you've got to process these transactions literally, maybe within 10 minutes. If a motor carrier has just delivered a load, he goes to a load board, he wants to now prevent himself from deadheading, he can be able to pick up a shipment and he knows he's got 100,000. Oh, it's worth 200,000. Literally on his phone, he can get a quote, take a look at what it's going to cost, and then he can approach the shipper and say, I can move this.
He already knows what his cost is for the excess cargo, and he can have the appropriate freight charges assessed in those. So now they're not missing loads. A huge issue for a motor carrier at the end of the day. And I'm going to even say, you know, this is sort of a green issue for us. Now we're helping trucks be loaded. These guys are able to pick up shipments. And so now freight is being moved in trucks, and they're not empty, you know, going down the highway. So I'm going to claim some ecological friendly aspects to this program. We have the bonds that freight brokers need as well. In addition, it's not mentioned here, but we do U.S. custom bonds, and we can support if those are applicable for any retail agent that's out there. The coverage highlights. All right, so I mentioned earlier, we have and we do a fair and accurate analysis of whatever form you might be up against. Or if you're approaching several markets and you want to offer a wider range of coverages with obviously different pricing structures, this document's going to really help you. But our form, many formats, the policy limits here right away. Be aware of aggregate limits versus occurrent limits. You know, and there are many, many, particularly on the auto side, coverage formats that are aggregate limit. Well, one claim can just blow the coverage for them. And quite frankly, with the statistics that we know that are out there, freight brokers can be hit with more than one claim related to an accident. You know, I mean, if you consider there's 4,000 annual deaths on U.S. highways directly related to motor carrier accidents, we're talking 11 a day. There's also another 120,000 incidents that are taking place where people are injured, you know, to the tune of like 360 incidents a day. You know, so the exposure's out there, and people, and they're getting named. And occurrence limits covers each accident you're drawn into in litigation. And so in theory, you could have, you know, several in 1 year, all of them going to see $1 million of coverage in our primary form. Or if they have excess, we're following form, its occurrence also limits up to whatever that is in place, each claim. Punitive damage, massive issue here. We look at the C.H. Robinson case, there was, you know, a punitive damage claim there present to the tune of $24 million. That punitive damage was reflected because they were deemed to hold themselves out as a motor carrier. They exercised too much control of the motor carrier. They had a penalty schedule that was present. And at the end of the day, they were deemed, you know, a negligent party in how they arranged that transit. Punitive damage is excluded under most forms in the marketplace. That's a huge issue now. If you think about the biggest financial risk that they have is a punitive damage judgment, and your policy form doesn't cover that, that's a massive gap in coverage. Our form covers it. In all states that allow punitive damages, it covers it. Obviously, in states that don't allow punitive damage, it's irrelevant. But there are many states that do. So that's a huge coverage issue. You want to make certain in any other coverage format you're looking at, you understand whether or not it covers punitive damages. As I mentioned earlier, our format not only covers accidents under a freight broker auto in transit, but during the loading and the discharge. And we've had some tragic situations, 3,000 pipe falling on a driver standing next to their truck, killed, and there was litigation that emanated from that. Our policy form covers it. Many in the marketplace would not. They're just covering transit. So that's a huge value added at the end of the day. Our policy form, we say it acts as a primary form for the freight broker and for a shipper if they have additional insured status under a freight broker's policy. You know, so what does that mean? They're named in litigation, legal counsel's assigned immediately to respond and defend to that litigation and counsel them on it. A strategy will always be to tender the claim to the motor carrier, but at the end of the day, most motor carriers only have coverage up to $1 million. Also, the allegation of negligent hire, which is one of the most common allegations against a freight broker, isn't covered under a motor carrier's form. It covers liability associated with the motor carrier. Obviously, the hiring of the motor carrier is outside of the motor carrier's business model. That's the freight broker. So our policy form is responding to the allegation of negligent hire, which is the most common and critical one on top of the punitive damages. Legal counsel, as I mentioned, is immediately assigned, and our legal costs are covered from first dollar. If there's a settlement or there is a judgment, that's where the policy deductible, typically it's 5,000, is in play. Some people may choose higher deductibles to get better pricing, but the most common deductible is 5,000, only applies to a settlement or a judgment. So every penny of the legal costs are picked up in our form. We got the most comprehensive network of attorneys, quite frankly, with our 47 years in experience. Our risk manager, Michael Stoll, managed 6 motor carrier operations in his tenure as risk manager at Pacer. They had one of the largest freight brokerage operations. They were involved in international logistics, stack train operations, terminals around the country, literally hundreds of litigations filed against that operation during his tenure there. A ton of experience, a ton of relationships built up as a result of that process. And those are all value adds that we bring to the table in our Broker Shield program. So we think it is a difference at the end of the day, and we appreciate the time you've given us to engage you on these topics here. All right. Logistic consulting services, we've been talking about this through the presentation. Here are details you can digest what's involved in this, but it's a wide array of consulting services that are offered that really can be a difference at the end of the day in you winning business, retaining business. In addition, you becoming most effective in producing and landing freight brokerage operations. With our support and us as a resource, you're going to come across as the most smart and knowledgeable party in the freight broker industry relative to insurance coverages, and the smartest when it comes to consulting services. I like to say buying a policy of insurance is one of a dozen things a freight brokerage operation can do to mitigate their risks. So if we're helping support them mitigate their risks through our consulting and training services, it's a huge issue. It's going to reduce claims at the end of the day. It's going to avoid the nuclear claim potentially from happening. And that leads to customer satisfaction and loyalty in the long run. So please digest what we have here, engage us in any question that you might have. I think I do want to highlight one of the webinars we've developed through Ryan is actually supporting and can be put on for the freight broker, in conjunction with the retail agent, about how to grow their own business, their top line revenue. The average marketing and salesperson in a freight brokerage operation is principally selling, we take care of problems, or we've got a big fleet of third-party motor carriers we can move freight with, or we're financially sound and we pay truckers on a timely basis. They're not problems, at the end of the day. But does the average marketing sales guy communicate to shippers that they're trying to land? I've found in most cases they don't, and we have a webinar geared for the freight broker marketing and sales department. The value adds, if you've got 20 million in auto liability coverage, you're trying to land a big shipper, just raising their awareness. Many shippers, unless they've had a claim, would not know about the exposure that's out there facing them, but it's a real exposure, which once articulated and then, identified there's a pain point, but then that freight broker through his auto coverage with limits of 20 million can address that pain point. There's a value add there. And we support the sales guy in getting these issues across. The freight broker, as mentioned earlier, could have a broad form contingent cargo policy that's really designed to pay if the motor carrier doesn't. That's a value added the end of the day. The extent of the freight broker's professionalism in vetting a trucker, that's the first line of defense against allegations of negligent hire. And many freight brokers invest in technology that is monitoring, whether or not a valid authority is in place, whether or not there's valid insurance in place, whether or not their safety rating is unsatisfactory or conditional. These are all issues that a good professional vetting process can avoid happening. And that directly benefits the shipper because they're going to get named in the litigation, but they didn't directly contract the motor carrier. They had a professional who provided professional vetting. And that's a big line of defense right there, just through the engagement. Complement that with a robust insurance program. These are real value adds that shippers, if articulated, can take in, and it can be a difference in them landing business. So now we've changed the conversation for a retail agent with a freight broker with, we're just the cost premium each year. We actually, through our consulting services, can help them drive the freight broker's top line revenue, while our Broker Shield program with the right coverages and the right consulting services protects their bottom line. Drive the top, protect the bottom. That's our goal. I appreciate everybody listening, and any questions, you know where to reach us, and thank you very much.